Are you an established small business owner or aspiring entrepreneur? Would you like professional advice to help your business grow and succeed? Well, look no further. The Virgin Islands Small Business Development Center is the territory's #1 resource to move your business forward. Enjoy no-cost advising, low-cost training, and technical assistance from experts in both the public and private sectors. The VI-SBDC is nationally accredited and sustained by the University of the Virgin Islands and the U.S. Small Business Administration. Visit us at our locations on St. Thomas, St. John, or St. Croix, and follow us on social media at VI-SBDC. For easy access to all our training and networking events, be sure to join our newsletter and download the VI-SBDC app. The Virgin Islands Small Business Development Center, here to help your business start, grow, and succeed.
Good morning, everyone. Thank you for joining us today. We are thrilled to see so many entrepreneurs and business owners tuning in from across the territory. In honor of Financial Literacy Month, we are dedicated to bringing you the tools and insights necessary to strengthen your business's foundation. Today's session tackles one of the most critical topics for our local economy: capital and credit, positioning your business for local financing. We know that for many USVI small businesses, accessing capital can feel like a major hurdle. Our goal today is to pull back the curtain and show you exactly what lenders are looking for so you can move forward with confidence. My name is Sharika Industrious Phillips, and I am the Network Marketing Coordinator here at the VI-SBDC. To help us navigate this, we are joined by two seasoned professionals from Popular VI who understand the unique landscape of our local business community. First, please welcome Kimberly Ortiz. Kimberly brings extensive experience in business banking and a passion for helping local entrepreneurs scale. Joining her is Linroy Freeman, who has spent years guiding businesses through the complexities of the lending process. Here's a friendly reminder to place your questions in the chat, and they will be addressed by the presenting team either directly in the chat or later during our question and answer segment. Copies of today's presentation will be attached to the post-survey email sent after this live session. We encourage you to take a few minutes of your time to briefly fill out the survey that lets us know how we are doing. This data is essential to us rendering these deliverables complimentary to you. So Kimberly and Linroy, thank you for both being here to share your expertise and how business banking impacts the long-term financial future of our entrepreneurs. The floor is yours.
Thank you, Sharika. Good morning to all, and a very special thanks to the SBDC and VI for inviting us to address such an important topic. So I'm very thankful for those entrepreneurs that are logging on. I know that today the weather is a little bit shaky, so I'm glad that you're taking on your time to log on. And we do hope that this presentation provides you valuable information for you guys to be bankable, to go to your financial institution, hopefully Popular, to address your financial needs. I know that we are here to help you address all of your banking needs, independently if it's your personal needs or commercial needs. So that said, let me see if we can go around here. So we will, as Sharika mentioned, we will address the subject of capital and credit and how to position your business for the local financing. And with this, I'm going to leave my good friend and colleague, Linroy, and he's going to first talk to us a little bit about the importance of credit. So, Linroy?
Good morning, everyone, and thank you so much, both Sharika and Kimberly. The pleasure is absolutely ours to be here with you this morning and to really impart this important information. We would hope that you would find information useful, Please feel free to engage and contact us if you have any questions or concerns as we go forward. This is your moment. Financing within the community is something that we take tremendous pride in being able to help support both existing and emerging businesses who are in need to help grow their businesses from whether ground zero or to expand and develop for the greater good. And it's so very critically important that each person within the voices that we have here can understand that it all starts with your commitment to obtaining information to understand how you go about accessing that capital, making sure that if there's anything that you need to be reinforced with, this is exactly why we're here today, and we're going to take that opportunity to provide that to you. We are in 2026 right now, and we're living within an economy and a marketplace where you have to be competitive. You have to make sure that you have the adequate resources, the adequate tools, materials, as well as information in order to position your business for the ultimate success. And so the idea here is to ensure that by accessing capital, you're going to be giving yourself the best possible opportunity to have the financial resources that will equip you with the things that will help you carry that mission out, whether it's to purchase equipment, whether it's to purchase more inventory, whether it's to purchase more technology, or to maybe get a bigger space that you may need to rent. All things of these types require capital to execute. So planning from now to at least understand how you can position yourself to access that capital, get the necessary lending approved with the lender that you engage with, preferably Popular Bank, then it means you will have positioned yourself to have a better chance to remain competitive and carry out your activities and plan for the future in a much more resourceful and adequate basis. So today we're going to cover many of those topics that goes along that track to show you what it would take to position yourself to get that capital. And please don't hesitate if there's anything that we need to reinforce as we go. Thank you very much. Back to you, Kimberly.
Yes, thank you, Linroy. I mean, that's such a great introduction for us and why we're here. I know that sometimes talking about banking and financing, sometimes it can be a little bit scary, and again, and we present some resistance because sometimes it's a lot of information that we have to present. And do I have it? How do I know if I'm doing it right? So hopefully, we're gonna give you a few tidbits. And just like Mr. Freeman said, if you have any questions, we prefer that you go ahead and do it while we're presenting. I think it's a great opportunity for us to also clear out any doubts that you might have. So financing, it's so important so anybody can have that boost at the moment for your business independently what stage it's in, right? But the most important thing is that you know how to prepare yourself. So here are some key steps. So the first thing is to establish that relationship with your banker. Why? Because that's his specialty, his or her specialty. It will help you understand how your business needs can be fulfilled with different products of the banking industry. Like example, the first step, and I hope all of you already have this, is to separate your personal financial information from your business financial information. And this begins with opening a business account. But who's going to tell you about this is the banker. That's his specialty. Her specialty is to make you know what other steps you need to complete so you can keep on providing and establishing your business on the up and up. That's the most important thing, right? When you come to any banking institution to ask for financing, we want to know that your business is established how you're supposed to be established, with all the permits that needed, etc. And the financial data is one of the important things because we need to separate, right, that personal information from the business information. Then it's to prepare a business plan. I know that SBDC has many resources to help you with this, but this is like your roadmap. You need to understand why is it that you want to plan this business. Who is my competition? What are the factors on the environment that will allow me to keep on growing, or maybe be a smaller kind of unit? That's things that you have to consider, as well as how to plan. What is my marketing? How am I going to advertise myself? So all of these things and the financial data projections will be established in the business plan. And I want to make a pause here. The business plan is not only like a checklist. It's not to, oh, okay, the SBDC is asking me for, is requesting a business plan, or Popular is asking me for a business plan. Let me just do it so I can give it to them. That's not the idea. This business plan is your roadmap. When you're 1, 2, 3 years into your business, every once in a while, just go back to your business plan. Are you doing what you said you were going to do? And if you're not doing it, why not? What happened? Did something in your environment change? Did you grow faster than you imagined? Are you going slower than you imagined? Sometimes you have to pivot the idea that you originally had. So I think it's very important. Every once in a while, I do recommend go back to that business plan, give it a look around. Am I doing what I said I was going to do? And if I'm not, what do I need to change so I can go back in line to the business plan? Or maybe it's the business plan that has to change. So that's something things to consider. And here is profit and loss statement and projections. This is financial data. We do not expect you to become financial experts. That's not the idea. But it's so important that you know your numbers. Like if when us in the bank, we're going to ask you, do you know how much you're netting? Do you know how much your profit is? Those are numbers that you're supposed to know. You don't have to, again, you don't have to be an expert on knowing every kind of different numbers that we have to plug and play into those financial statements, but it's important that you understand them. Again, that's why having a banker and also having a good relationship with an accountant, those are key people in your empire, so you can understand that numbers. And if you see something that doesn't make sense, you can ask for it. You can, get that flag out. Like, I'm not really seeing these numbers. Why am I, maybe I have a loss and you didn't know. Why am I having a loss here if I've been generating X amount of sales? Why am I losing money? Why am I net lossing? Maybe you have to present another type of pricing. Maybe it's a salary thing. So it's things to, again, you have to look for and then discuss them with these key players for your team. And super important to know and manage your credit score. Why is this important? Because even though the financial transaction that you will be doing will be for your business and will be under the business's name, you are the owner. You're the business owner. So as a financial institution, we are going to see how you have behaved, how you have managed your credit score, and see how you manage your different financial obligations. Because that's like a little bit of a roadmap as well as for us to see how you've managed your credit score as an individual. Will give us an insight on how they're going to manage your commercial credit. So if you've been managing super well all of your financial obligations, chances are that you will continue managing your credit, commercial credit the same way. So that's why it's very important to know and manage your credit score. And to deep dive on that particular point, I am going to pass it off again to Linroy.
Fantastic. Thank you so very much, Kimberly. And as she said, it is so critically important for you to have a very strong and positive handle on your personal credit because it plays a role in the decision making, what we would call the credit evaluation and approval process for when your business credit request comes into the bank. We're evaluating it, yes, for the business, but as Kimberly pointed out, you as the owner or the principal or the person who stands behind the business, we equally have to do an evaluation of you personally. Sometimes you're called upon to serve as what we call a personal guarantor for the business transaction. So whether you are a LLC or a corporation, you, the primary principals, especially those who bear more percent ownership of 20 or 25% more percentage ownership, we're going to have to go through that level of evaluation of you personally. So as Kimberly pointed out, it is critically important for you to have a very good feel and handle about how you're managing your personal credit. And what we wanted to do here is make sure you have that full understanding of where we access the credit information from and what really goes into determining that score that you've heard about for so many years. First and foremost, what you see here is an outline of 5 key essential things that goes into your credit score. Now, your credit score is something that will be made available through 3 particular credit bureaus overall. And you'll see some information about those bureaus on some future slides. We have Equifax, TransUnion, okay, and we also have Experian. These are the three credit bureaus that you would hear about and that would be important for you to see how your score is being reflected across all of these bureaus so that you can have a good feel, perhaps even before coming to the bank. So let's talk a little bit about what the score tends to really mean. The first thing you're seeing there in the pie chart is that credit payment history is a huge chunk of what comprises your overall credit score. Credit payment history means everything about how have you been paying the open credits that you've had, or even those that you've had in the past. So if you've ever had a car loan, a personal loan, a mortgage, a credit card, whatever those instruments are that you've had, the credit report takes into consideration how you've managed those payments. So we are always here to encourage you to please, please, please remember the critical importance of paying your bills on time, every time. Sometimes it's even good to pay a little ahead, or sometimes to pay a little bit more than just the minimum required so that you can gain a little bit more consideration for what's going on. But paying on time is critical. Now, for those of you who may have some issues that you may have encountered in the past, life happens. It's important to recognize that even if you had a little bit of a delinquent situation from time to time, please remember to contact your creditors. You be the one to maintain that open communication with them so that if you're expecting to be late, or if there's something that you encountered that was late a few times past, make sure that they have an understanding of what your situation is to see if there are things they can do to help you to ensure that your payment history going forward is well managed. This is a critical piece. As you can see, it's 35% of what your eventual score is going to be. The next big piece of your credit score is comprised of what we call balance owed. So for example, if you have an auto loan to buy your car, you got it 2 years ago for $20,000 to buy the car that you have. And they may have given you 5 years to repay that $20,000. So 2 years later, maybe you've been doing very well with your payments. The balance on that credit might be down to $15,000 or $14,000. The key here is that you always want to ensure that you have a very low overall balance as compared to the total amount of credit you have. So if you have 3 loans, 2 credit cards, and when you have the total exposure of all those things combined, you may have had a credit exposure of about $60,000 combined between the credit cards, the auto loan, the personal loan. The idea is to keep your balance really low, especially on credit cards, no less. If somebody gives you a credit card with a $2,000 limit, try your best to maintain utilization of maybe 10% of that $2,000 at any given point. Even if you charge something, try to pay it down that the balance is not all the way up to the $2,000. If you're very close to that limit, it's something that is called too much utilization, and it impacts your overall credit score. So keeping your balances to a very minimal as compared to what you have available to use is very important, and it factors into your score. So the lower the balance is as compared to your credit limits, the better your credit score is going to be. The next piece of the computation of your credit score is the length of your credit history. The longer you have your name registered in the credit system, the more it's an advantage to you as it pertains to your score. So for example, if you're someone who only entered the credit system last year for the first time, you're only maybe 12 months into having established credit. Hopefully you're managing it well, but the reality is you're considered very new to the credit reporting system. So the longer you can establish credit, 10 years, 15 years, 20 years, the length plays a role. And as you can see, it's 15% of your score. New credit is 10%. The idea here is not to get yourself too overwhelmed by having too many new credits. You only should be acquiring credit as you need it, when you need it, as opposed to just acquiring credit because you're eligible. But it still means that if you encounter new credit, it will play a role towards your overall credit score. Try your best to only pursue credits when you really require it, because for every time you attempt to get a credit, there's something called an inquiry that's going to register on your credit report. An inquiry means that some institution, a bank or financial institution, is querying your credit report to see what your score is to make a decision on your request. So every time there's a query on your credit report, it lowers your score. So try your best not to be querying to 4 or 5 different lenders all within a 3-month period, because each of those inquiries will ultimately reduce your score. And then types of credit plays a role. It's 10%. As you would know, there are varied types of credit. So you're always going to get more points towards your report for the variety of credits you have. So if you have a credit card, great. If you have an installment loan by way of an auto loan, great. Maybe you have an existing mortgage for where you live, great. By having those 3 types of credit, it plays a more positive role as opposed to if you only had a credit card. So sometimes they look for a credit card by way of a revolving credit, a loan by way of an installment type of arrangement, and even sometimes a mortgage. The more varied types of credit you have, the more your score goes up. So what Kimberly is going to do now is click to the next slide, and this is going to give you an idea of what credit scores tend to look like. So over on the left-hand side of this slide, you're going to see that it kind of gives you the idea that credit scores overall starts from anywhere from 350 to as high as 850. So the range you see here is all about when all those 5 things we just talked about computes, where did your ultimate cumulative score land? And as you can see, there are different ranges here. So if you are with a score of 730 or higher, you're considered excellent credit. You're the type of individual that has managed your credit well, have done well in all those things we just covered, and you're the kind of principal that we, the lending institutions, may find very attractive to consider giving an approval consideration to. The next range is anywhere between 700 and 729. That's considered very good to above average. So if you have a 700 plus credit score, you're really in the favored tiers of what would be considered good handling, good scoring for bank consideration purposes. That's not to say that if you're in 670 to 699 that you're anything tremendously less than. That's still considered fairly good credit. Okay, it still means you have ways for which you can improve, but it is still considered good credit overall. And for us, we tend to want to see our credit score no less than 680 for us to even say that you are meeting what we would call some of our threshold requirements. And that's because if you're in the tier that's below, from 585 to 669, that's considered fair credit, not necessarily good credit, but it means you have some ways to go. And many times these scores are impacted by any of the 5 things you saw me refer to before. It could be a matter of too much outstanding credit. Your balances may be too high. It could be that you've had a lot of delinquency. Maybe you've had something that you may have defaulted on, unfortunately. These are the things that might impact your scores down to these areas. And of course, if it's below 584, that's considered not the greatest credit. It's considered poor credit and an opportunity for things to really be improved. Now, when you check your score, if you find that you're in any area where there's some things to address, don't give up on yourself. The important thing here is contact your creditors, find out if there are things you can arrange, payment plans of some kind to still get things to where you can have your score improved over time. You also want to check your report to see if there are any errors. Maybe there's something on the report that didn't belong to you and could be affecting your score negatively. So checking your report is important. So that's the importance of you understanding not only what comprises the scores, but what the scores are themselves, and the importance of maybe checking to see where you stand so you could know what types of steps or decisions you have to make. On the right side of this same slide, we thought it would be fitting for you to understand when it comes to positioning your business for success, your personal credit report and score plays a role, but here are the 5 other things that we refer to as the 5 C's of credit. These are the things that ultimately goes into considerations for the bank to say, yes, we are going to approve this particular credit transaction. And it starts with character. At the end of the day, character of you personally, character of you business-wise matters. Unfortunately, if we had to hear that the business might have been, exposed for some level of impropriety or something that was not necessarily in the most legal and or favored standing, These are things based on the news that might have been put forth or some level of legal proceeding that got adjudicated. If it's unfavorable to the business, the character of the business might come into play as to whether you have a good record paying your bills on time, whether or not you've been a good corporate citizen within the community or not. These things play a role in the decision making about the character of what's being evaluated. Capacity. Well, at the end of the day, a financial transaction going to always come down to whether you have the ability to repay what you're asking the banks to lend. So the importance here is when you provide the financial information that Kimberly alluded to on the prior slide, it's going to paint a picture as to what other debts you may have and how have you currently been handling those debts. Because if you want 50,000 from the bank now for your business, we have to find out if we enter that payment that comes with the 50,000, do you have the capacity to repay it? And so that's where financial information on your part is going to help confirm what type of capacity you have. The same financial statements that you provide is going to help us to understand the business's overall net worth. And many times we just want you to understand what that tends to mean. To determine net worth for a business or even net worth for an individual, it's a very clear and straightforward exercise. You get the value of all the assets, which are things that you own in the name of yourself personally or in the name of the business. And then you, on the other side, put a computation of any payables that you have, which is money that you have to pay out, your loans, your debts. The value of the total assets of things you own on the left minus the things that you have to pay out or owe on the right is your net worth. And this is an important part that we have to get in place for a better understanding of if you have enough kind of overall net worth to accommodate even what we're about to insert as a new payable on your part. The next C that you see there is collateral. And many times people would identify that as what is it that the bank is going to use to secure the loan that we're given. And that's really what it's all about. Just like how a mortgage, you get the money to buy the house is the collateral for that loan. Or if you get the money to buy a car, the car is the collateral for that loan. And all it means is if in any worst case situation that you did not make the payments as agreed, this is the item that the bank will have access to try and recover some of what was left unpaid or what was needing to satisfy the credit to a zero balance. Conditions. This is the fifth C. This is where we as a bank tends to evaluate other things that might need to be put in place and be considered as we look towards making an ultimate decision. Maybe you're in an industry that is thriving, which is good for you because that helps the bank to feel confident that you're in an industry where things is thriving, the trends are going upwards, and all of a sudden it means if we help to finance you with your needs, you too will have the ability to continue thriving and repayment of that would be a little bit more assured. And sometimes it's the other way around. Maybe there are other circumstances that's affecting your financial situation. Think of COVID, for example. No one's really saw that coming in 2020, 2021, but it happened. And those circumstances put a lot of businesses into a different climate of performance, a different climate of need and stress factors that really impacted their ability to be successful. So conditions is outside circumstances that may affect your situation that we always have to factor in. So these are the 5 C's of credit. Okay, very good. Kimberly, let's keep it moving. So the one thing we wanted to make sure that each of you have an understanding on, as particularly as it pertains to your personal credit, is that you do have ways for where you can access your credit report in order to see how you're doing. Again, this is 2026. There's a number of things online, a number of different apps and programs like Credit Karma that some people might tap into, register for, and have the ability to see scores in real time from the various bureaus. But in particular, what we wanted to drive home is that the federal government saw it fitting to create legislation that says each of you can have access to your credit report for free once per year. Free once per year by going to annualcreditreport.com. So we didn't want you to be missed on the opportunity to tap this particular site for one free credit report every year. So in addition to anything else you may have, apps on the phone, different things you may sign up for, those are normally paid type programs where you can access your credit reports. But annualcreditreport.com is the federal government's way of saying, worst case, you can have access to it once every year. And we encourage you to take advantage of that, because even though you might think all is well, you're paying your bills on time every time, you do need to check your credit report just to ensure that there are no inaccuracies or things that might be there that needs to be addressed. Checking it makes sense. All right. Okay, Kimberly, we can keep moving. Now, sometimes when you check that credit report, like we said, between TransUnion, Equifax, and Experian, these are reporting agencies where it's tied to your social security number. So when you check the report and you see what's listed there, the first thing to do is to see if everything is as you expect it to be. Because if you identify that there's an unusual transaction, something that isn't quite as it should be, not only should you be instantly seeking to notify your creditors and or even taking steps to contact the agencies to say that something might be reported inaccurately, but maybe there's something there that you see that doesn't even belong to you. Okay, and this is where sometimes your profile could have been compromised. You know, we have fraudsters out there, those who are willing to be on the bad side of intentions. And so we've seen everything that can happen. Sometimes your profile got whether hacked or penetrated, and somebody opened up a credit in your name that you never really had ownership for. If you see anything like this is where you should take steps to contact the 3 reporting agencies right away to engage the conversation and the steps to make sure that you can get these things addressed. And this includes not just contacting the agencies to report it and to validate it, but also you may have to contact SSN, Social Security, to make sure that your Social Security number, may have some level of understanding that it may have been breached. And filing reports, with the law enforcement also plays a role, because at least there's a record. Should this have to go any further, should it have to end up in litigation, there's at least that step you can say you did take to kind of put these things into place. So we want you to be responsible. We want you to be educated on these things, because when you come to the bank for that financing request, and then we report to you that your credit score is 600, and that's the first time you're hearing it, and when you check it, you see that there were things there that you could have possibly addressed beforehand, but now it means you got to take the steps to address it before you can come back to the bank. We still want you to be able to understand what is in your best interest, to be educated on these steps going forward. All right. So that's kind of like a little brief summary on credit reporting and the role it plays in commercial financing transactions. And we would be happy to address anything by way of questions if you have as we move forward. Back to you, Kimberly.
Thank you, Linroy. I mean, this is such important information for you guys to have. It's so valuable. I would like to add a little bit on the conditions of the 5 C's that Linroy was mentioning. Also remember that we live in a tropical area, so we do have the scares of hurricanes. We both know that's stuff that happens as well. So it's some of the outside conditions that Linroy was mentioning is also weather conditions that we know that can affect our business operations. So please take that into considerations when your guys are doing your business plans, etc. And please take advantage of the annual report credit that Linroy was mentioning, because it's something that is free. It's something that will not affect your credit score as is. And it's the most important thing that we can have is information on our side. When we have information on our side, we can act. Okay, so that said, let's go back to determining our financing need. You're ready, you check your credit score, everything is on the up and up, and you need money to boost your business. So what is the first thing that you're gonna do? You will determine that uses of funds. What do I need to right now drive and improve my business operations? I know that we might have plans to maybe expand to a second store or something like that, but that might be future plans. But what do I need right now? Do I need an industrial machinery so I can up my production time, so I can cut up the production times? Do I need marketing? Do I need to have a better facing on my business logo? So we have to understand, what do I need now to improve my business operations? So once I figure that out, let's say with the example that I need an industrial machine. Let's say I'm gonna bake. I'm a bakery, so maybe I need industrial stoves or industrial refrigerators, freezers. So we have to see that project cost. How much is all of those machineries is going to cost me? How much is it? And we look for different type of quotations. Just don't go to the first site that you saw and it's going to cost me $20,000 and that's it. Do your homework and check in a few sites and see how much that machinery that you need, that equipment that you need, how much does it cost on average? And start adding up. So I need a stove. I need maybe more displays. I need maybe a little bit of marketing. So add on what do you need? And let's say it adds up to, I don't know, $60,000. So right now, can you repay that? You figure out, I mean, again, you're not going to figure out a whole structure of tier price, etc. But if you got a loan of $60,000, do you have enough cash flow to repay that? Of course, when you go to the bank, he's gonna do a little bit more math and he's gonna tell you exactly what you're gonna pay or not. But right now, that's the importance of understanding your financial data. Do you have enough cash flow to have a repayment source? Do we have that collateral? Do we have an emergency stash for that? So all of these questions are important to know that if you're ready at this moment to apply for that commercial credit. So if all of these questions are answered, then we figure out that we have different credit depending on business needs. Your banker, that relationship with your banker that I spoke at the beginning was going to help you understand the different types of credit that are for the different business needs. We do have a term loan that's principal plus interest, and this is something that's more used for purchases of equipment, of properties, if we have to do some kind of remodeling of your business office, etc. This is what something is mostly used by for term loan. There's a credit line. It's a credit line. It's something similar as a credit card, but it can be a relative or non-relative revolving or non-revolving type of credit line. That means that it's something that you can use for something. I always use an example of if you're in a restaurant, you have to buy a lot of inventory maybe every 2 weeks, maybe it's every week. So maybe you need a revolving line. So because you have to pay your suppliers, so you need to your inventory. So that's what's most it's used for. And then your credit card. The credit card is mostly used just as you use your personal credit card. It's like for emergency purchases. Is to cover operational costs that maybe got in the way in between other payments. So it's not something you want to use as a source of payment every time. It's something good to have. And right now we do have other commercial credit cards that also offer rewards. So maybe it's something you want to study. So maybe you need rewards, and then you can study how that having a credit card benefits you more. Again, we do not expect you to learn all of these products and go to the bank and say, I need a credit line. That's what your banker is for. But it's important that you know that there are different lines of products that exist for your business needs. And honesty, you have to be super honest with your banker with what is that you need right now. And he or she is going to tell you, look, the product that most benefits you right now, it's a term loan because you're going to be buying X product, and then in the long run, it's going to be a more comfortable payment for you, etc. So please know that these products exist, and they exist so they can benefit you in the long run according to your business needs. Okay. So I think I'm going to hand it back because Linroy is the expert in these terms. I'm going to hand it over back to Linroy so he can explain a little bit about these basic terms.
Fantastic. Thank you so much, Kimberly. And for what you just got from Kimberly was understanding that we do have different credit products depending on what your need is. That is exactly the product that we would best want to see matched with your credit request. And sometimes the terms are a little bit used interchangeably by our folks, but we want to make sure you get the right product for the right need so that in the end, we're giving ourselves a chance and you a chance to have a win-win situation, especially as it starts to pertain to repayment. One last thing I'll just like to add briefly on lines of credit, just so you could have this distinction in your mind. When it comes to the lines of credit, let's say you decided I need a line of credit of 10,000. The difference between that and saying you got a loan of 10,000 is that with a loan of 10,000, you're going to always have some fixed period, whether 3 years, 4 years, 5 years, and a fixed monthly payment every month that you have to pay. With a line of credit, it's not quite that way. With the line of credit, it means even if you have 10,000 available, what you'll find yourself repaying is only based on what you may have used. So for example, if you just decided to as Kimberly said, take $1,000 to buy some supplies for the restaurant, well, what you'll be repaying as you go forward if you didn't do anything else is just based on that 1,000 out of the 10,000. So you still have 9,000 available for when the next request comes in. But it's that your payments is going to be based on the outstanding of what you drew down on the line. So just a little extra something to bear in mind, especially as we come to this slide, so that you could understand when we refer to repayment and payment capacity. I want you to have a better understanding of how these things that you see on this slide kind of resonates with the product types. So the first one you see there when it says financing 65 to 75% of project costs. Let's use a hypothetical example. Let's say you are trying to buy a new vehicle for the business. Maybe you're in the type of business where a vehicle is necessary for you to move things along from point A to point B and to service your clientele. Okay, fine. If the vehicle is $10,000, just a used vehicle, great. The idea is that the bank could very rarely offer what is called 100% financing. 100% financing in that example would be as if, since the car is $10,000, the bank is giving you $10,000. Doesn't quite work that way. How it more works is that you have to have some sort of contribution towards the 10,000. We call it like an owner's injection. So whether it's 25%, whether it's 35% of the 10,000 that you're putting down as a deposit, as a down payment, as your own injection, this is what we mean by number one. And therefore, the bank will be coming in to supplement the balance. So if a $10,000 project situation or vehicle situation exists, and you could put down $3,500, that's the equivalent of putting down 35%, and the bank is going to finance the remaining 65%. Or if you were able to put down $2,500 in my example, then it means you've put down 25% and the bank is coming in to supplement the 75%. It's just for you to bear in mind that approaching the bank, you have to itemize the total cost of what your needs are, get to a grand total, and recognize that the bank is more likely than not to be in your favor if we're being asked to finance within this type of range. Doesn't mean that if you don't have the 25%, don't have the 35%, that you cannot converse with the bank. We still want to hear from you, because there are times where you might say, I only have 10%, so I need the bank to come in with 90%. Case by case situation, circumstances being what they are, evaluating the whole profile of your credit requests, the banks can use discretionary measures and look at what we call the global picture to see if there are things that can be done. So I don't want you to feel as if you cannot approach the bank unless you have that level of down payment ready. It's just that we're giving you what is more on the favored side, what is a little bit more consistent with banks' expectations. You do better when you have something to inject, and then you have the percentage in this area for the bank to finish, meet your needs, and finance you to the end of the line. When you see number 2 that speaks to adequate payment capacity, 1.25 times to 1.5 times, this is all way of telling you, when you look at your profit and loss report that you'll be giving to the bank, maybe you're giving us your 2025 performance from January to December 31, you're showing what you gross as income, you're showing your expenditures, and you're showing what your net income was at the bottom. What we're really saying here is that if we take the net income that you have at the bottom, and we also insert what would be the equivalent of the payment for the loan that we are seeking to add on based on your request, we got to make sure that there's sufficient net income to accommodate the payment at least 1.25 times or 1.5 times. So if your net income is $5,000 after gross income and all expenditures, your net income was $5,000, but the payment for the bank for the whole year might end up being, $3,500. We're taking that 5,000 divided by 3,500 to see if we have that 1.25 or more. In essence, we're taking your net income, we're taking the quantity of that loan payment obligation you may have for the next 12 months to see if there's sufficient capacity by taking that income, dividing it by our payment, and making sure there's sufficient left over to accommodate what we're doing. Anytime you find that you're in that range of 1.25 or higher, we're in a relatively solid place. Now, of course, somebody might end up with net income of $50,000 and the obligation to the bank is only $10,000 for the year. Well, 50,000 divided by 10,000 would mean that you have 5 times the equivalent of the loan payment left over in your net income. So you're well beyond the threshold of what we're looking for. So the higher the capacity, the better. But this is more of like an explanation of where the requirements exist. As we refer to number 3 real quickly there, where it says personal guarantors, guarantees of the owners, that's what I was alluding to when we were talking about personal credit before. Even if we do the loan, as Kimberly said before, in the name of the business, or the credit card or the line of credit in the name of the business, or even the credit card in the name of the business. The idea is that you, the owners who bear more than 25% ownership of that business, is going to be asked to consider being a personal guarantor. And all that means, it will not show up on your credit report. So if the loan was given to Linroy Freeman Incorporated for $30,000, it's in the name of the business, not in Linroy Freeman, the individual's name. However, Linroy Freeman, as the owner of the business, may be asked to serve as a personal guarantor that if the corporation fails in its obligation to repay, Linroy Freeman personally is saying that he, in this case myself, will be willing to step in to ensure that the debt still continues to be honored, managed in good standing. So you're pledging a personal guarantee, and that's why we have to evaluate you personally for the things we described before. Credit reports for you, financial statements and information for you to determine net worth and other things. Just in case you may have to play that role in the future, we want to be able to assess and evaluate. So that's what that is. All right, Kimberly. So in moving along now, we thought we would kind of ensure that part of our closing in the area of what does the bank ask you to submit in order to consider having a good comprehensive credit package presented for you to get the financing approval that you so desperately and so importantly need. So this is a little bit of a checklist of the things we tend to ask for. So everything you see here is what makes that application complete and helps us to have the information we need to make the decision. So it starts by saying the corporate organization documents. Basically here, if you are an existing person in the bank, meaning your company is already has a deposit relationship with the bank, 9 times out of 10, it means we already have some of your originating documents, your articles of organization. We have your EIN document from IRS. We have some of those things that were used to open up the bank account. So we leverage those things to reduce any redundancy on your part, keep the application process simple. But the only 2 things sometimes we need to make sure is current is the current business license and a certificate of good standing if it's applicable to you based on your business structure. So we look for certain things to be current to the time that you're applying. We leverage any pre-existing things we may have. Of course, if you never had a relationship with Banco Popular before, the current organization documents will be everything about the organization, to include your articles of organization, IRS, EIN, tax ID number. It will include any operating agreement you may have. It may include the license and the certificate of good standing and everything else that we will provide about how the organization was formed. Income tax returns for the last 2 years. We do tend to ask for this both for the business that's applying, especially if it's a business that's been in existence for 2 or more years. If it's a startup first time type request, obviously this will not be applicable because you're just getting going or trying to get going for the first time. But if you are operating and has operated for any period of time, we at least seek to have a minimum of the last 2 years and preferably the IRB tax stamped copy of those returns. So not just the tax return for what you might have prepared and have home in a drawer, but the stamped copy that shows this is what you truly submitted to IRB. It kind of validates your tax return by saying this is a copy of what we did submit to the Internal Revenue Bureau. And similarly, the financial statements for the same applicable 2 years. Sometimes you may find that we may ask for a third year, depending on what the situation might be. But again, we're emphasizing at least the last 2 years. And what do we mean by financial statements? Well, this is your profit and loss statement and your balance sheet. So the same profit and loss that deals with income, expenses, net income. This is you providing it based on whether you did it on QuickBooks, Excel, or some other application. We tend to need that equivalent financial statement that pairs with the same tax return for the same period. And then the balance sheet is more of the description of your assets, any liabilities you have, and establishing that net worth that we talked about earlier. Kimberly had already outlined for you that you must make sure you're very detailed in providing the use of funds. You know, what is it that you're requesting? What's the purpose of your request? As she said in your business plan, it's not just a document to get an approval from a bank. It's a living document that you should use and refer back to as you go. The key here is we, the bank, we do have to be very clear on what you're requesting and for what purpose. So this is the time to be detailed as opposed to brief, so that we could be clear on what's being pursued. Accounts receivables and payables, if applicable to you, these are the terms that goes with accounts receivables. If you have anybody who owes you funding out on the street uncollected, any clients or any individual who you provided a service to, but you're still waiting to be paid, there's something called an aging schedule. So the receivable will show the name of those persons, how much that they owe you, and for what level of period you've been waiting to collect on it. Is it between 0 to 30 days? Is it between 30 to 60 days you've been waiting? Is it 60 to 90 days you've been waiting? 90 days to 120 days, which is 4 months, or beyond 4 months that you've been waiting to collect. Your goal is to have your receivables always closer to the front, which is between 0 to 30 days, because the longer you take to collect from someone, the more likely you may not collect from them, or it becomes a little more difficult. So we ask for these things if they exist in your situation, because it helps us to determine what monies you have out there that might be on its way coming into your cash flow that could also help with servicing the debt that we're about to give or the loan that we're about to give. But we need to see the quality of those receivables. And same thing for payables. You know, if you have anything where you owe to pay outbound, we look for that same schedule, but on the other side, which means who and what is it that the business have to pay. And we're not just talking about your regular routine monthly things like utilities and stuff. We're talking about if there are suppliers who you owe money to that you haven't fulfilled to 100%, or refunds that you were supposed to give back. Any payables that exist over time, we would look for what those are and for how long just as well. Now, in the terms of where, depending on what your needs and your credit requests might be, especially if it's a new business, we always ask for what is called projections. As a new business, you have to be mindful that, you might have to ask and project how you may be performing going forward if you get this loan. So as part of what Kimberly was alluding to with the business plan, all of these things play a role, because you have to be able to financially project that if we give you the funding that you're asking for, how will that funding help you going forward for the next 2 years? So you'll be outlining what we call a projected profit, expenditure, net income type of outline for the next 2 years if you were successful. And then the thing about projecting is not just to pull numbers from thin air. You see the word assumptions there. It means you have to put the projections with assumptions, which will help the bank to understand how you arrived at the numbers that we see. So if you know insurance is going to be $1,000 to pay for the year, and you have projections of maybe qualifying that as making sure you have $100 saved every month towards the insurance cost, let us know that you broke it out to make sure the premium can be paid, because you broke it up in 10 months at $100 to be able to pay the $1,000 when the time came. The assumptions are your explanation of how you arrived at the numbers. And the bank needs that to better understand what you've said. And then, of course, patents or any other proprietary information, the list of things you can provide to a bank with your credit application is exactly what it needs to be. It's you having as many things that you may think helps us to better understand the framework of your business, pictures, invoices, testimonials, anything that really helps us, please feel free to include those. Okay, Kimberly.
Thank you, Linroy. I
Yep.
think this is our last slide. Before
Yep.
we go and close off, I would like to highlight a little bit about the projections and the assumptions that you were mentioning. I know we want to bet on our businesses, but the most important thing that I would recommend for these projections is please make them realistic. Base them on the history of your sales and the history of your revenues. And it's sometimes, and I'm sure Linroy can attest to this more than I can. Sometimes we see the history of sales, of revenues, of net incomes, and when we compare them to the projections received, it's like 1,000 times higher than the original. And sometimes, although the assumptions are made to justify those numbers that you're presenting, it's important that you give us something that is tangible. Is it really possible that you are gonna see a growth of 500%? Is that real? Is that tangible? And if it's so, well then just as he said, those assumptions are gold for us, because they're gonna give us that reasoning that in fact your business is gonna grow that 500% that you said in the projections. So the thing is about the projections, don't just put them high because banks want to see nice numbers, high numbers. Do not do that just because you think that's going to look better. It has to have some reasoning. And important as well, if your industry, your business has seasonalities, if it has seasonalities, also factor those in. If you have a high season in Mother's Day that's coming around the corner, and if you have a high seasons on graduations, so always factor those things in if your business has that quality that has those high and low seasons, because that's also something we want to see in those projections, because we want to see how you figure it out when you have a low season and how you handle yourself when you have high season. So no, those are a little bit other tips that I wanted to factor in before closing out.
Absolutely.
Yeah. So thank you. This is all for now. We are open to any questions you might have. Since we were sharing the screen, I'm not sure if something is in the chat, but we do thank you for all of your attention. If we are ready to answer any questions you might have.
Absolutely. And just before any questions are fielded, hopefully the viewing audience, can see this very last slide that includes contact information for both Kimberly and myself, that beyond today, should you have anything you wish to follow up on, any inquiries you may have, or just to get to know us better, you see our email addresses there, you see our phone numbers are there. Please feel welcome to access this and connect with us going forward. And yes, the floor is definitely open should there be anything you wish for us to answer for you. Thank you.
All righty. Thank you for that information. So, do we have anyone who needs to ask a question directly? You can raise your hand and we'll go ahead and let you unmute your mic so you can ask directly. Okay, we pretty much seem to be in the clear. So I want to thank you for that information. Your presentation was very thorough. It's helpful, and this will be converted into an on-demand format, so persons can always go back, watch at their leisure, and when we send that email in a few minutes, you will get a copy of today's presentation. So I still don't see any hands raised. I don't see anything in the chat, so you can go ahead and proceed to the next slide, and I'll just share what the SBDC has coming up. So the VI SBDC has so much more in store for our USVI small business community. You can visit our website at www.visbdc.org. Follow us on Facebook, Instagram, Twitter. Subscribe to the VI SBDC YouTube channel for new uploads of our webinars. We encourage you to download the complimentary VI SBDC app from the appropriate app store. And so let me just go ahead and I'm going to share my screen because just in case you don't know how to see those on-demand webinars, I want to make sure that you can navigate our website. So for persons in the audience, when you're looking for training, go to hover over training, select events. It will take you to this page. And so this tab takes you to the training portal. And as you navigate lower down, you can see we have a USVI Government Contracting and Matchmaking Summit that's coming up. That's our only in-person event happening within both districts. It's going to be on both UVI campuses. So on May 5th, we're going to be in St. Croix at the UVI Great Hall. And then on May 6th, we're going to be in St. Thomas at the 13D Innovation Center. So click here to get to the SBDC trading portal. And if you want to see something that happened in the past, I encourage you to pay attention to the type of event, select on demand, make sure your center is all so you don't miss anything. And when you hit search, it will appear here for on demand. Now, if you want to register for what's to come, coming up tomorrow, we have SBA Senior Area Manager Wayne Huddleston. He will be presenting on the 5 C's of SBA loan eligibility because this is Financial Literacy Month. On April 15th, we have the USVI EDA, and they're coming to present on navigating capital. They're going to do a deep dive into the USVI EDA funding and SSBCI programs. On April 16th, we have Merchants Commercial Bank. They're going to be presenting on mastering business finance, loans, banks, and beyond. On April 17th, we have SBA Federal Contracting Certifications. We know as we approach hurricane season, we want you guys to be prepared. So we're going ahead of the season to make sure that you are tasked with business resiliency as it pertains to disaster preparedness. That will be hosted by our SBA Senior Area Manager, Wayne Huddleston. And then we have VI SBDC Advisor, Darrell Edwards. He's going to close off April, making sure that everyone know that they have their blueprint for success as it pertains to having a business plan. Okay, so that's to look ahead of what's to come. Go ahead and register. And let me just go back to today's session. I still don't see any questions. So I want to thank our popular team for collaborating with us on this initiative. It's always a pleasure. You guys were amazing, outstanding, and that was a wealth of information we hope that our audience grasp and they can, build that relationship with your institution. So once again, on behalf of the entire VI SBDC network, compliments of our State Director, Karen Jones, we thank you for your attendance and we want you to stay dry and enjoy the rest of your day. Take care, everyone.
Thank you.
Take care.
Good luck.
Thank you.